All right. Good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Let's get to it. Challenge is in all cash here after we had to sell out of Home Depot and Intel here this morning. So waiting for the next signal. There are no new signals on the board right now. That kind of surprised me. I will admit, but. There are a lot of downside 3-7 crossovers, but as I kind of looked at the signals and looked a little deeper into them, um, a lot of it is not a lot of the downside crossovers. For instance, like an Oracle, right? We have a downside crossover on the 3 and the 7 with Oracle. And sorry, computer's lagging a little. There we go. But the consolidation risk on it is high, and I looked at why that component's high, and basically what it's saying is chance for a 2 average true range follow through is very slim. And I guess I don't know that I buy that, but those are the way the metrics are with it. So I'm not going to go and chase it. Some of it does have to do with the fact that bear signals to be generated, it takes a little bit more than for bull signals to be generated. That is just simply the way the algorithm is tailored right now, because of the way the market conditions are. When we look over the 3 years of research and the reports and all the different signals and everything else, the biggest whipsaws are with the bearish signals. The best results have been with the bullish signals. Now ultimately that'll change when market conditions change, and I think some could argue that hey, market conditions are changing, but until the market itself is shown some significant weakness over time, we'll keep the bearish parameters just a little bit tighter here. They're a little looser than they were last quarter, but they're still not what the bullish parameters are here for it. Okay, so nothing to do there for the challenge. Going to go into the close here with cash and run with that. Now today market just getting sold, getting got slammed here this morning out of the gate. And in a very similar fashion to yesterday, where the market just couldn't find any sort of reason or any sort of uptick. The market opened up and, all right, get to the sell. Had this one small bounce, get back to the sell. Then we get to the lunchtime hour. We've seen a small little bounce come into play here. But, it has been all sell. But when you look across the board, what's really interesting about the sell action today is it's in a lot of the winners for the year. We're heading into the last quarter of the year, and we're in a year where if you look at the S&P, right, you look at the S&P is up substantially. Right, it started down here in January. The S&P was fairly low, and it's had a pretty good year. And this really looks, when you look at the stocks, you look at the sectors, you look at how monies have flowed. This looks like a lot of fund managers kind of packing the bags in for the year. And when we look at just some of the top performing stocks, here on the year, the Arconics of the world, getting dumped, the Starbucks of the world, one of the best performing stocks of the year, getting dumped pretty hard. Even at Chipotle today getting caught up. This is one of the best performing stocks of the year. You look at a Microsoft getting caught up, one of the better performing stocks of the year. Home Depot, one of the better performing stocks of the year. Just getting down 2%, but it's having one of its worst days of the year here today, and we are seeing that since that ISM data yesterday morning. A lot of the top stocks are what are getting sold. A lot of the things like Caterpillar, which sold off hard yesterday, granted, not selling off as hard here today, but even some of the bottom dwellers just not getting hit as hard here today as a lot of the top stocks, and the sector hasn't mattered. Pepsi, Coke, we've seen staples, we've seen consumer names, commercial real estate names, industrials, financials, you name it. A lot of these top stocks have been hit very hard here in the last 28 hours, since that ISM data yesterday, and that's what it signals to me is we're seeing fund managers, looking at this quarter and going, man, I really don't want anything to do with this quarter right now. Let's just lock in the gains for the year and call it. And, can we say completely all fund? No, it's never everybody, but that's, this is what it really looks like, and something that I suspect is happening. Now, I do suspect they'll be back if there's resolution to the trade deal, right? To the trade war between the U.S. and China. I suspect they'll be back. But until then, I think we've lost or are losing, because I don't think it's done in terms of, those that have started selling. If they want out for the rest of the year, then they're not going to be able to get out in 2 days, right? There's going to be another batch of selling. But I do think the market's losing some of its participants here for the rest of the year. It's going to set up for what I expect to be a more volatile end of the year. What do I mean by that? There's chop and there's volatility, right? When we look at something like what the market has did right through here, this is chop. Right, this is chop. Even this right here is kind of chop. 1 day up, 2 days up. 2 days down, 1 day down. Volatility is more like what we saw last year at this time, where we would have 5-6 days up, and then in a matter of 3 or 4 days, we'd see that completely erased. And we were talking about moving through some really heavy ranges, and I suspect that's what we're going to be looking at here. And just from a technical standpoint, market busted through, kind of this little small breakout gap that it had right back at the beginning of September, and has really just seeing that heavier sell pressure. The market metrics are bearish. The market vibe itself is bearish. If we look at something like the bullish percent index, having a really bad day here today, down 8 points here. That's about as clear of a bear signal that the bullish percent index gives. We have, things like the number of highs versus, number of new highs versus new lows. You can just see we have not been stacking in a lot of new highs here in the market over the last 2 months. And when we start to see a breakdown on this without new highs being stacked on, a lot of times there's going to be continued follow through here to it, and I'd be very surprised if we don't see another couple doses of selling. I mean, I wouldn't be surprised to see some sort of little snapback tomorrow or something of that. But anyway, that's that's what we're seeing with these metrics. All right, so again, going into the close here with cash, we'll take a look tomorrow morning, see where the signals lie, and I'll look to get that money put to work. Look to get this show here on the road. Again, thanks for hopping on. Have yourselves a great afternoon, and we'll talk to you tomorrow. Take care.